Welcome back to ValueHunt, and today here I have the pleasure of having Andrew Brown. He's a big inspiration for me. He has his own YouTube channel. He invests for himself. He created a business, but he will talk about this in this great podcast. So let's jump right into it. I don't know, Andrew, do you want to add anything?
No, not really. Yeah, like I said before we hit record, that I'm not very organized here, and you're going to get me off guard with a lot of questions, I'm sure. So hopefully, I'll have some fun, and I'll see if we can talk about something that I haven't talked about before.
Yeah, great. Sounds good. So the first question I like to ask everyone is like, who is Andrew? Because it's very interesting to see how people define themselves. And yeah, so who are you?
Oh, super deep. Who am I? Okay, I'm a bit of a nerd, I guess, and I've always been like really into businessy stuff, making money, figuring out um, like the lifestyle. I love lifestyle design as well. Like I like thinking about how I want to spend my hours and my days and my future and all that stuff. So who am I? I don't know. I'm just a bit of a mishmash of being a bit of a nerd, a bit of an adventurer. I've traveled the world for about 10 years now. Um, yeah, I don't think I can like we all can't compare ourselves to other people. I think I'm just this person, but I feel like I haven't quite done the thing that I'm going to do that's going to be big. I haven't done that thing yet. I feel like I'm still early enough that I'm working towards whatever that big thing will be. Yeah, that's who I am. I'm still building.
Great. That's a great answer, and I think there's no right answer in answering this question. So I really liked it. And another thing that I really liked when watching your videos was actually the video that you talk more about yourself. Not, I mean, the technical and analytical stuff is great, but what really got me interested was the video that you explained your life story, and you mentioned your grandpa and and your father as big inspirations to you. So could you share with my audience also that story and maybe add a little twist?
Yeah, sure. Okay, well, it's simple to me, but yeah, I'm glad is interesting to others. So, my grandfather, like, I always just saw him as just my grandfather. Like, I didn't think he was like that amazing or anything. Didn't even know what amazing was. But when I look back on his life now, I'm like, wow, he was a freak. Like, he went from this small little town in like the southern parts of Australia, and like sort of 60 years ago in Australia, the government was giving out essentially blocks of land in the middle of nowhere for any potential farmers to come and develop that land and turn it into something productive, because they wanted to sort of expand Australia and support the agricultural whatever economy. So my grandfather randomly got given, he put his name down in like some like newspaper lottery, got given, drawn this particular plot of land never had been anywhere near this place before, and packs up his truck and it takes 3 days to get there. Australia being a big country, of course, takes 3 days to get there. Gets there, it's nothing, just like trees and like dirt. And like tree by tree, he like cuts down the trees by hand manually. He brings his wife, which is my grandmother. They sleep in a tent for like 6 months while they cut the trees down to build a house. And he would just get odd jobs in the other neighboring farms around to get some income coming in, so he could then like buy some animals and then pay for a little machine or whatever it was. And step by step, he turned this into this really productive, awesome farm. Like generations later, my dad is still on the farm right now, probably getting close to retirement age, but it's like this wildly successful farming thing. And it's pretty epic that my grandfather just went on this crazy adventure and started like with absolutely nothing and just did it with his hands. And that's just so inspiring. And I find all the lessons that he taught me over my life were really cool. And a lot of it was probably more like physical labor stuff. So like we'd be out on the farm doing like stuff, like whatever the physical stuff, building fences. Generally, I spent a lot of my life building fences, I felt. And yeah, I don't know, just learned a lot of lessons from him and my father as well. And they're really good people, and they're really honest, like hardworking, caring people. But they're business people. So like starting a farm, that's a business, right? So like you have to figure out, your costs and how you're going to make revenue and what are your costs going to be, and can you make enough money to do the next thing. And then there's a lot of debt involved with farms as well. So when you're buying like properties nearby, you need to leverage and get debt. So I learned a lot about debt and a lot about the stress that comes with debt. So it was a pretty cool upbringing from like a business sense as well. I got to see the inner workings of like an operation.
Yeah, that's a great story, and I find it really interesting because it's a different background from what you would expect from someone that it's in investing. So my next question would be, how does farming transition into investing?
Oh, it really it's really simple actually. So when I was about 14 or 15, one of the first things I did was I bought off my dad some little baby sheep, right? Some little lambs. And this was my way to make some money. So I was like, okay, I'm going to buy these little lambs. They're going to cost me, $25 for a little sheep. And I'll pay my dad to rent like what the land is that they're going to eat the grass. And when they get to a certain like weight, I'm going to sell them and make profit. And I made like, I don't know, I think I bought them for 25, paid the costs. This is per sheep. All in was like $45, $50 and sold them for 90. So I like nearly doubled my money in like a 3-4 month period. And I was like hooked by that. I was like, oh man, like business is epic. Like I could just like with my own brain and my own like thinking, I can figure out a way to make money. I don't need to go get a job like other people. I can actually like solve that problem in my head and like generate some sort of value. So that got me into like the business idea world. And then that logically, I guess, as I started making money in my life, I wanted to, the next logical step was to like, while I was sleeping, I wanted my money that I was saving to be doing something better than just sitting in the bank. And that led me down to like the stock market investing route, I guess.
Yeah, that's we kind of share a similar story. You flipped chips, I flipped sneakers, so it's kind of the same thing.
It is
But
very much. I don't know. We all have this. That's something cool that we have in common. I've actually met a lot of people who did something similar. Like they bought something and sold it for a bit more, and yeah.
Yeah, I think that's a great way to start, and you don't have to have much brains to do that. You just have to buy right and buy something that people want and sell it for a bit more.
Yeah.
So it's a great idea for starters. But now delving more into the investing side of things, I'm pretty sure your investing approach has evolved over time. I hope so.
Yeah.
So could you share a bit of your investment philosophy? How do you think about investing in general, and how has that progressed over time?
Well, it's definitely still a work in progress. It's still evolving now, and I assume in a few years' time it will be different to where it is today. Because I'm 35, so if I look back in my life 5 years ago, I was a significantly different person then to I am today, and I assume in 5 years' time I'll be significantly different again. So I understand that this is a bit of a moving target, but okay, how did it evolve? It started off by mostly just listening to people who I thought were savvy and knew what they were doing. There was an Australian investor that I used to follow. He had like a newsletter, and I really enjoyed reading this newsletter once a week. And he would talk about like investing in the stock market and like why there's where the opportunities exist. But it was all sort of value related, but I wasn't doing any work. So I wasn't looking at balance sheets and income statements and figuring out, like, I wasn't even really looking at even multiples. I was just seeing this guy and like believed in what he was writing and saying, okay, I understood what that thesis was and I would like invest alongside. So that was naive at the time, but it actually worked out all right, which was probably more luck than brains. And that sort of got me my seed money, which I used for a business. And anyway, it's from, but as my investing has changed a lot, I would say in the last, since I started my YouTube channel, it's moved a lot towards what I'm really trying to do is I'm trying to find the safest way to make the most amount of money, right? So there's a lot of ways to make a lot of money, but I feel like a lot of them aren't very safe. So like we can look at companies that haven't turned any profit yet, but they might one day, or companies that have just IPO'd that like maybe they go up 5 or 10 times over the next 3 to 5 years. It's possible, but I just don't think it's a safe way to do it. Like statistically, you'd see that that's, I'm really not sophisticated enough to figure that out. So I really, after reading everything you can and looking at a million companies, I think you just start to figure out like what I think is this one, like the safest model, like the business model. And like is interesting. I had a question just even yesterday to me, and we were talking about like SaaS businesses compared to like a serial acquirer. I'm not sure if your audience is familiar with what I'm talking about when I say serial acquirer, but let's assume they are. So a business that buys businesses, that's what a serial acquirer is. But a SaaS business is amazing because they're lean, they have massive scalability potential. It's a high margin business. They're really cool. They're really great if you can do them well. But it's still just one business, and that one business can break for many reasons, from increased competition, regulatory changes, issues with management, whatever. Like there's a lot of reasons that business could break, and a lot of SaaS businesses get into a lot of trouble by issuing too much stock, or there's a lot of things they can do wrong. And I feel like all your eggs are in sort of that one business basket, and you're hoping on this idea being amazing, and you can get lucky and get that right. But I think I just tend to personally lean towards serial acquirers that having a basket bet themselves amongst lots of different private businesses. And then you're investing in that conglomerate of private businesses to diversify a lot of risk. One of those, like Johan at Teqnion, which is a company that we'll probably talk about. When I met him, he said, like, look, there are better high flying companies out there, I'm sure, but like imagine a table with 25 legs on that table. You can break a few legs and the table is still going to stand up okay. And I kind of think of it like that. I'm like, okay, what is the way to make the most amount of money? And serial acquirers can get like amazing returns. Constellation Software has done 37% for 15 years now or something like that per annum. And it beats Nvidia, it beats Netflix, it beats a lot of amazing high flying companies. And that's just because they were really good at this serial acquirer model. So I think you can still get the upside, but I think you can take less risk. And that's sort of where I'm at the moment. And that's sort of what most of my portfolio looks like. It looks like 80% of it's serial acquirers and a few companies that I've had from the past that I haven't got into selling yet. But that's where I'm at the moment.
Yeah, that's great. And we can take this in two ways, but you mentioned Teqnion. We can't go in any other way than speaking about Teqnion. And yeah, my audience is familiar with this serial acquire model because I've talked a bit about Teqnion. But I know that you know so much more than me. But I'm really curious to know how you came across Teqnion.
I don't quite remember. Sorry, that's a gecko in my room. I'm in Bali. And there's some interesting noises coming out of the walls here sometimes with animals. But okay, so how did I find Teqnion? I actually don't remember. I'm going to guess 18 months ago, I would have found it. I'm going to guess it was from Twitter. I can't think of any other way I would have come across it. Someone would have said, here's a list of serial acquirers. Here is some small cap serial acquirers that maybe no one's ever heard of. And I don't know how it exactly happened, but I'm going to guess someone either tweeted it out or someone actually told me about it from my YouTube audience. And that's something that having like the people who are listening to this now, like leave comments and like reach out to you, David, because like that's where I get all the best ideas and all the best conversations are from the people that I talk to in my like who just reach out to me. And it's awesome because like I would say 95, pretty much everything in my portfolio, maybe not Berkshire Hathaway, everything else was a suggestion by someone in my audience about, hey man, I think you're going to like this company. It ticks all the things you're looking for. You should go have a look. And I go have a look and maybe I find something wrong with it, but I found a lot of great companies from just someone recommending it to me.
Yeah, a great farm of ideas.
Yeah,
it's great. I heard Monish asks for students for their best ideas when he goes and gives a talk in colleges and stuff. So yeah, we ask our audience.
Yeah,
that's great. Yeah. And you mentioned you spoke with Johan and the management at Teqnion. You even made some cool videos. So if you're interested in Teqnion, Andrew is the go-to guy because he has so much content about it. But I really want to know what insights did you took from meeting the management, because in serial acquirers, the hard thing that I can see is that you have to be really right about the management, because it's really about the people in the business. So yeah, how was that experience for you?
It was probably one of the best things I've done. I was luckily I was in Warsaw at the time, and going to Stockholm is a cheap, close flight. So I just 1 week just thought I would reach out to those guys, and because I was thinking of investing, and I just said, hey, look, is there a morning you have coming up? We can go out for breakfast or something. I'd love to just pick your brain for an hour, but make a video if that's cool. And they said, yeah, come along. Like, that sounds cool. How did you even find us? Like, this was before it became really popular on Twitter and people were talking about it. They were so shocked that I was like wanting to make a video and reach out to them. They were like, how did you find us? And I said, I don't know. And so, yeah, so I flew over to Stockholm just on a weekend and caught up with them in their office. And the thing that you hit the nail on the head when you said like a good serial acquirer is going to come down to management. And the thing that stood out for me the most about both Daniel and Johan was they have thought through just about everything. So like, and I'm talking like all the little nuances and all the little details. And they were like anti-private equity guys. They were not private equity background people. They were not private equity they didn't have the private equity brain. And I think that's the key part to the serial acquirers that I think that are wildly successful, and the ones that maybe not so much, is if they've come from a PE, like a private equity background, there's some bad habits that I think private equity guys get stuck into. For example, they think 2.5, 3 times EBITDA to debt is okay. It is not okay. It is not, because if a bad run happens in a cycle and your EBITDA your earnings shrink a lot, all of a sudden you're at 4, 5, 6. That debt is getting out of control, and it gets out of control quickly. So, there just seems to be this big. I think there's a canyon between the guys, all the serial acquirers that have come from this PE background, private equity background, and then the guys that haven't. And the guys that haven't, I seem to get along with so much better. And Johan and Daniel were those guys. They were they were business people. You would sit there and they said, look, we could talk about projections and the numbers and stuff like that, but that's not what business is. That's not how business works. Our business is each business is its own individual thing, and sometimes there's problems. Sometimes hard stuff happens. Sometimes you have to scramble to find staff, because every business in the world has problems with employees, and some people are sick. So you got all these problems that are happening all the time in their subsidiaries that like it's nice to like talking to investors is like one thing, but that's like so far down the list of what's important to them, is like how they present and like um, what they show up into their annual reports. It's all about like just doing the work and um, like getting the results and let the results do the talking. And I don't know. I just thought they just did a really good job of thinking through um, everything that's involved in a serial acquirer. So even like, for example, is they had a dividend. When I went to go and speak, when I spoke with them and I was in Sweden, they had a dividend at that moment. They don't have a dividend now. And we talked about it. I said, look, like, let's be honest, if you can reinvest this money back at 20% plus, like, why would you issue a dividend? Like, that makes it's not logical, because that money is you need that money to go and reinvest, like, and to buy more subsidiaries. And they explained it, like, why the dividend existed, that it was like there's a board of and how the board operates and things like that. But they were being pushing really hard for the dividend to be cut, and the way they sort of explained that the dividend was handicapping their growth of their business. It was not. It would be better if they didn't have the dividend, even though they had a dividend. The way they went through that, like, that explanation was really clear, and it was just like, oh yeah, you guys have this under control. I don't even have to think about it. I think I can invest in you guys in this business. Check on it once a year, but just sit back, and you guys have this. They're the smartest people I've probably ever met, and they've got a really deep understanding of every little element of their business and why they make the decisions they make. And it all comes from like a really great long-term moral compass. And I don't know, I can't fault them just about on anything. I think they're nailing it. Yeah, they're going to make a few acquisitions at some point that are going to probably have problems. But that's the nature of the business. And that's why they're up to 25 or so businesses now. It gets stronger and stronger with the diversification that they have. So, yeah, I love that business and I love those guys.
Yeah, and it's really ingrained in the Swedish culture to pay a dividend, because even 2 days ago, I was speaking with Chris Mayer at a Q&A, and he said that he also owns Lifco, which I'm sure you know.
Yes.
And he said that he was speaking with the management, and the management was brutally honest. The CEO was brutally honest and said, yeah, we just pay a dividend because this guy owns like 30, this guy in the board owns like 30% or whatever of the stock, and he wants to get some income. So yeah, that's why we do it. And I guess that you don't necessarily have to be doing everything right, but if you explain things honestly, and it's not much of a trade-off to the whole investment case, I mean, it's okay, but it's also much better that Teqnion doesn't pay a dividend, because yeah, they are so young, and the more capital they have to reinvest, the better.
That's exactly the same reason why Teqnion were paying a dividend. Was someone on the board had over 35% of the business, and they wanted to get their money out, as like they wanted to get some of their money back, and they wanted to live off, like, they wanted the money. They wanted the cash to redeploy somewhere else or live their life, live this. And it took Johan and Daniel like years to convince this guy on the board that they can make so much more money for him if they don't pay the dividend. So, but they got there, and they were able to win him over eventually. So it's interesting. Yeah. Lifco had the same problem, because that was exactly the same thing.
But Lifco didn't solve it. So Teqnion,
yeah,
they still pay a dividend.
They do. They do.
But yeah, now that we're speaking about management, which is the biggest pillar in any investment case in serial acquirers, what's your broad thesis about Teqnion? I'm asking this question because I know it's publicly available in your channel, so I wouldn't usually ask this for a private investor. But what's your thesis about Teqnion, and how do you think about the whole company outside of the management?
Okay, I think that they can find and redeploy the cash flow that they're generating for as long a runway as we can imagine. So they're both, Daniel and Johan, are pretty young guys. I think they've got another 40 or 50 years of doing this. And so there's one that the guys that are running it want to do this forever. They understand how to allocate capital. So, and they've already got a nice fundamental base of cash flow coming into the business. It's not in the too early stage where they're having to like raise money to go out and make the acquisitions or anything like that. They've got to the point where, extra money helps them speed things up, but they have a really good solid base of very rock solid businesses. So if you go through each one of the subsidiaries, like sort of one by one, you'll get a feel for like these. They're not all amazing businesses, but together it creates like, you're like, wow, this is some wild, like different industries here. So like, the example why I like someone like Teqnion over like Instalco, for example. Instalco is another Swedish serial acquirer, and they focus mostly on the what would be like the services industry, like the like renovations and construction and like services. I think it's HVAC stuff. Anyway. And what happens is that becomes cyclical. So you can go through like waves of when they're all struggling all at the same time and when it's all booming all at the same time. And that's okay if you can think long enough. But the thing is, some of them get into trouble. But when you have Teqnion and they have so many different businesses and all these different industries doing different things, they're not correlated to each other. Therefore, I think it's even stronger. Plus, I just think that the cash flow that they're spitting out, they'll just be able to just compound this thing away by making more similar acquisitions over and over and over again. I think apparently they said the pipeline is amazing. They said in Sweden they've got more than enough targets just in Sweden. They're looking in England now as well. They've made 2 acquisitions in England, and I think England's a great opportunity as well. I can't see anything getting in the way of this thing compounding for a long, long time. So for most other serial acquirers, I can think of something that could blow it up. Teqnion's gets really hard to think of why it could get blown up.
Yeah. I mean, we have to do the thought experiment anyway. So what could go wrong with Teqnion? I mean, some crazy stuff, because sometimes when thinking about risk, we think about the probable things that can go wrong. But most of the times when things really go wrong is because something totally unexpected happened. Yep. So let's say Teqnion blows up. We are, 10 years from now, Teqnion blows up. What will have happened for that to take place?
I asked the same question to Johan and Daniel actually in my interview. So it's interesting you're asking me. I think that a war with Russia could make things problematic. So if NATO went to war, that could change things, because a lot of 90% of these businesses are internally inside of Sweden. If Sweden had to change from a market-driven economy to a wartime economy, therefore, like all their resources got turned into whatever could be helpful for the war. That could blow up a lot of their subsidiaries, because some of them would not be related to war efforts. That's a way out there extreme thing I can think of that, like, it is technically possible. But then you've got if something happened to the management team, like if Johan and Daniel, something tragic happened there. And it's funny, like you think about that and you're like, yeah, okay, I'm not going to even put a percentage on what are the chances of something like them getting hit by a bus or something. But like that, and that sounds like you're like, why are we even talking about that in investing? But you wouldn't believe it. But like, it's such a sad story. About 2 months ago, and a company that I'd been studying for like a long time, it's called Edilizia Acrobatica out of Italy. The CEO died suddenly. He owned 75% of the stock, and he got super sick and just died like over the weekend. And like, then that just raises all these questions. Like, obviously the 75% of stock goes to the next of kin. So what does their family do? Do they start selling off that that 75% stake? Are the management team who are going to come in and take over, do they have the drive, the passion like the CEO founder did? There's lots of variables that all of a sudden get thrown around. So if something happened to Daniel and Johan, even though I think the rest of the team at head office are actually really good people, it would nearly have to be like something happened dramatically to their whole like head office.
Okay.
Yeah.
I actually looked into Edilizia Acrobatica because I was interested in Italian companies. My dad is Italian, so I thought I had a little edge on that side, and I could ask things, you know. But it was a sad story, and it's a case study of extreme cases that can, create uncertainty all of a sudden. But if the business is strong enough, I guess they will still. It's not like they are blown out of the. They are not out of business, you know.
No, you're right. You're right. I'm waiting to see what happens next in terms of like if management team are just like the person who's going to come in and take over. Do they? But then you've got to think about what's their incentives. Like the new person who's going to take over. Maybe it's possible that another business comes in now and buys it out. There's a lot of variables that I just don't know what's going to happen. There's a lot of uncertainty going around. If it is a really solid business, that's cool. But I just feel like there's unanswered questions, unfortunately. So I'm sitting tight on that one for now and maybe for a longer. But it actually, that little event was quite eye-opening for me. Was like, it's good that I'm diversified a little bit. Like a lot of investors say, you know, if you really think an investment is amazing, just go big, like go all in. Like if that's the best use of your money, go for it. But I also think it's not that bad to have 5, 10, 15 companies. I think once you get to sort of like 50 companies, you're going a bit too far down the diversification route. But having everything tied up in one or two businesses is you take the risk of the extreme scenario of someone dying suddenly or something like that, and you're just trying to build a less fragile portfolio, I guess.
Yeah, sure. That's a wise thing to do, and even diversifying among business models, as you mentioned, is a great idea. Exactly. And I forgot about a really important question that I had in mind, and it's about Teqnion, but we can also generalize it to other serial acquirers. And this is the topic of valuation, because I feel like sometimes when you are too tied up into the qualitative stuff, maybe you might end up, even for a very good business, paying up too much. So it's good to have an idea of what the stock is worth. And you never get a precise range, but it's better to be roughly right than precisely wrong, right? So, what's your take on that? Basically.
Okay. Valuation. Well, I don't want to overpay, and just because when you do the numbers, and even though extrapolating things out into the future is like kind of stupid because we can't predict the future, but if someone like Teqnion can grow at 18%, potentially 20% for a long, long period of time, it's going to go pretty well anyway. So it's even if you're buying even today, I did the calculations just recently. If you had it for 20 years and they can just keep doing the same thing for 20 years, you're still going to get a 15, 16% return per annum. The thing is, I want bigger than that because I'm probably going to make some mistakes in other investments. So I kind of want to get 25 plus. And the reason that sounds crazy, but it's because I'm going to make some mistakes and I need to sort of balance the mistakes with some big winners. So I try to do a valuation. I do some valuation work with the DCF, and just some really basic projections, just like growing out the revenues out for the next 10 years at a certain rate, and figuring out what what their margins would be in 10 years time, and what would the stock price be with those margins. So yeah, that's sort of, I try to be loose about it, but I'm also like loose enough that I'm trying to just get somewhere in the vicinity. But my personality type is that I'm kind of tight, and that if I like Teqnion, like if I extrapolate that over the next 5 years at today's prices, I really think that it's probably only get like 10% per annum, and things have to go pretty well. Things essentially there can't be any problems, and I think you're only going to get 10% return per annum from today's prices. So I'll happily wait until I think my valuation numbers are getting closer to the 20% plus range, before I put some more money to work in something like Teqnion. Did that make sense? Did I answer?
Yeah, it makes a lot of sense, and it's a good thing that, for example, if you think that the valuation is too overpriced, you may take a small position, take some time to research even deeper, and prices will fall. Even if you read Chris Mayer's book, 100 Baggers, you see that even the best companies go down 25-30%. So you will have more chances in the future to buy that business at maybe better prices, and once it's already bigger and stronger, let's say. So that's an interesting take. I know that, I don't know if you're familiar with this approach, but Chris Mayer talked about how he takes the ROE and then projects it. Let's say the business can reinvest at 20% their capital. Then he grows that capital at a given rate, let's say an estimate, and discounts it back to the present value. So have you experimented with that strategy, or is it something that you don't?
Not exactly, but I'm pretty sure if I can do that in my head, it sounds like it would come out to a pretty similar number to what I'd be getting anyway. Because the ROE is just their reinvestment rate, and then like how much capital can they reinvest at that rate as well, because you've got to think of tax, because the company themselves pay tax on the profit, so you don't get to reinvest 100% like perfectly. They're going to have to reinvest 70% or something like that. So my guess is that it would come out actually probably not too far off. That's an interesting idea though, and I might look into to see whether there is a big disparity between my work and that type of model. But then again, like we're just mucking around with numbers here. Like I really try to I do the numbers first to get to see whether it's kind of cheap or kind of expensive, and then I sit back and take a really like look at the forest from the trees kind of idea, and think about, okay, let's be real here. Can this business keep doing this for 20 years? Because what we're going to miss, the big value is going to come, because a lot of like DCF models and a lot of these models only go out, like they only put them out to like 10 years or 5 years or something like that. Yeah. But where you make the money is in years like 15 to 30. Like, so that's where you really make the big bucks. So if you can sort of think of something that is firstly going to be around that length of time and has the runway to be able to be around for that length of time, and have a good system in place to grow consistently for that period of time, you only have to be in the ballpark at the start. Like paying, like Teqnion's what, 210 a share at the moment. Let's assume paying 150 or 250 isn't really going to matter in 30 years time very much. Like it's probably going to be 1% or 2% difference at the end. Like it matters, but how much does it matter? I don't know. I think you've got to get all the other things right first, and you want to be in the ballpark for prices. Try to be as exact as you possibly can, but don't freak out about like $20 here, $10 there in stock price.
Yeah. As Charlie Munger says, the good ideas are the ones that do you in. And the margin of safety is a great idea. but you can think about it in so many different ways. You can think about it in terms of price, but also quality. Like quality actually gets you a lot of margin on mistakes, and sometimes we pay too much attention to price, but still I think it's not very smart to invest in a business that has to grow like 200 times just to justify its current price, you know?
Totally agree.
So
Like it's why do we have to do just one thing? Like we can do both. We can invest in a great quality company at a good price. Like that is possible. You don't like not all amazing companies are always super expensive. Like that's not always the case. Like you don't have to justify the price. You just go, oh, okay, it's expensive right now. I will keep track of this, and that's what I do. Is I have a watch list. Each year, I update my fair valuations of that. I update what I think the growth rates will be moving forward, redo the numbers, and see whether we're getting closer to something. And then for the year, I have like a target price that I'm like, I should really pay attention if the price gets to this number. That's when I'm going to like take action and I'm going to do something. I'm going to go digging in to figure out why that's happened. Is the business in decline, or is this just like some macro thing, or is this something like do I see this as an opportunity to actually get involved? So I think that's something that I it works for me, is to have this watch list with my valuation work done already and my homework kind of done on these companies, and then targets of when I'm like, oh yeah, I would actually be kind of interested in here. And then that really helps me from like not over analyzing something, because I can just go, oh, I'm just going to park that idea. That's a really good business. Way overpriced. Vitec software in Sweden. Great business. Love everything they're doing there. Love the model. Love VMS software. Way overpriced. Can't figure out how I'm going to get a good return on that investment at that price. Just makes no sense to me. But I have a target price for when something happens. I don't know. Maybe Sweden serial acquirers have a bad run for a while and they all get dragged down together. I don't know what's going to happen, and I just want to be ready for that. So, doing my groundwork and my homework. It just got really dark here. I'm sorry about the light.
yeah, no worries.
But doing my homework first has really helped me think through that decision making. The decision of when I'm going to buy or something like that. So I have like, I don't want to fall in love too much with a particular company either. So like, there's 20 or 30 amazing businesses that I sort of have on my like really important watch list. And I don't have to invest in all 20 or 30 of those, because even if I get just 5 or 10 of those, that's amazing because they're amazing businesses. And I'm okay with that for now, I think.
Yeah. That makes sense. But I was thinking about when you were talking about this diversification thing, position sizing came to mind. And this is actually, some people have a really simple system about choosing, let's say, 10 stocks, 10%. I don't care. I just put, if I don't have enough conviction to put 10%, I don't invest. But other people go and use the Kelly criterion and things like that. So where do you sit among those two approaches? How do you think about position sizing?
Great question. Don't have a great answer. I've looked at the Kelly criterion before as well. That was interesting, but the problem with that is you don't like. That's great in like a scenario where you can take the bet many times. Investing, you don't get to take that bet. You get to like many times. You get one bet per investment kind of thing. So like per company. So I don't think the Kelly criterion works for investing. I wouldn't use it. But it's an interesting thought model to get your head around like position sizing initially, I think. So it does have its use case. How I do it now is really not probably smart, but it's what money do I have available? How much of that is, because most of my money is tied up. So it's like, okay, how much do I have sitting around somewhere or that I've generated from my businesses and like my personal businesses. Can I put a bit of that to work? And yeah, I like to start with like a pretty small little piece because I know that this is the psychology of investing, which is I find quite interesting and I've learned recently, which is like, you'll probably find this too. The first time you hear of an idea and you do that sort of first few hours of research, you can really get emotionally like, oh man, this is a great idea. Like this thing is amazing. Like this is great. This is going to be a winner for sure. Like this feels good. I think I've got this under control. It's pretty easy to understand. I should invest. And like the price is good, everything's good. You're like, oh, okay. Like I don't even need to think about this anymore. This is in. I can just put something to work here and go. Just leave it alone. The thing is that emotion will change over like a month or two, and sometimes something better will come along as well in that time. Sometimes you just uncover some information that you didn't know about while you were so excited about it initially. So sometimes I try to slow myself down as best I can. So even if I really get emotional, I really want to invest something in it, I still might do that, but I might be very small, like whatever's in my trading account at the time. And I'm not going to like move money in there or anything like that. I'm just going to go, oh, okay, there's a little bit of money in there. 1% of the portfolio value. Let me just put that in there in that company so I can get like started, and that'll keep reminding me to like figure this thing out. And if I'm still pumped about this idea and I've done way more research and I still can't fault it in lots of ways. And I've gone through my checklists and I've gone through all the things that I can possibly do. And then I will figure out a way to put more money into it later. That's sort of how I go about it.
Yeah, I find the same problem, so don't feel alone. It's quite normal, and actually, I like your strategy. It's interesting, and I might copy it from you. What I had in place right now, because I had the same problem. I would look at the company; it would all seem great. I would want to go skim through the annual reports just to say I read them, so I could make an informed decision. But yeah, what I learned from those mistakes is that I put kind of a stop to my emotions, and I delay the decision. So what I do is I say, okay, in this given idea, I will only make a decision like 1 month from now, and in that month I have all the time to read all the material I want. I don't know if that's the right approach, because there's a flip side to it, because if the price moves a lot, then you can miss on that opportunity. But there are so many psychological influences playing out at the same time. There's anchoring. So maybe when you learn about a stock, the price is, let's say, $90. And once you're finished with your research, it's 110. But you know the business much better, so it would have been irrational to take a position at 90, but you're still anchored to that price. So it's such an interesting game, even from a psychological point of view. And I would argue is actually the most important thing, because the technical stuff can be learned at all times. The psychological takes a bit more.
That's a super impressive answer. I think you're right, but and like FOMO is real. We all get it. We all have this fear of missing out. Like it is a real thing in the world, and anyone who says they don't feel it, I think, is like a robot, because I'm obviously very aware of this fear of missing out, yet I'm still susceptible to it just as much as everybody else. Like I'm even like thinking at the time, I'm like, oh, I'm just scared of missing out here because this thing could go, like you said, from 90 to 110 while I'm researching it, and I'll feel like it's got overvalued or whatever. That's just stupid thinking. But we all have this same thing. So my solution to that problem at the moment is throw a little bit in, just embrace it. Just like embrace that fear of missing out. Just go, yep, I don't want to miss out on this. So I'm going to put something in so I don't feel like an idiot. So I don't feel like I'm like stressing about it. And now I can take my time and do the research properly. Because what was happening if I didn't have anything in it, even just a little bit, like a tiny little bit of money, I felt like I was in a rush to figure out whether this was right or not. And I was rushing through it, and I was maybe optimistically just making sure everything fitted well. But if I've already got something in it, and it's not that big of a problem if I lose a little bit of that, because it's it's not going to make a difference anyway. That psychologically tricks me to slow down.
Yeah, that makes sense. And another funny story about this problem is that I'm so rushed to, let's say, not missing out on the amazing opportunity at this given price, let's say 90. But once I finish the full position, then it drops another 5%. So yeah, it wasn't worth it at that. But I think a mix of you just have to figure out what works for you, and that's also an interesting approach. Obviously, I don't want to criticize your approach because I know nothing, but just maybe you haven't thought about it. Also, you get a bit of, let's say, attached to that decision. I don't know, but also it's a small amount of money, maybe you just don't care. If you reach out to a different conclusion, let's say.
Oh, I've sold things. I've got through that. Like I've done the initial in little investment, done the research, and then sold. I've done that more than I've probably done it 3 or 4 times this year. So,
okay.
And I actually honestly feel happy about it if I do sell it. I'm like, that was so smart of me not to invest a full chunk of money into that thing, because I'm like, I would have missed this obvious thing, and like that's obviously a red flag, and obviously I don't want to invest in this thing anymore.
So that's great. I'm really happy that you found this approach, and maybe I'll give you feedback on how it works for me. I'll try it out. As well. So another super interesting company that I haven't done the full research, but I read interesting things about is OTC markets. And I know that you own it and you like the business model. So could you guide us through how do you think about it and how do you came across that idea?
This was a recommendation from somebody in my audience again, which is awesome. And this was quite a few years ago now, which is good as well. And what I love about this business, OTCM, is that I believe they're essentially a monopoly. What I mean by that is they sort of facilitate the trading of stocks on the OTC, so over-the-counter markets. They sort of run that operation, I guess. And there's thousands of companies on the OTC, a lot of international companies as well. Even some big international companies like to have a dual listing in America, so they have an OTC listing. There's fees involved with all of that. I think that it's just a beautiful business. It's not a serial acquirer, even though they have bought another business recently. That's not their purpose. Their margins are out of control good. They're like software margins essentially, and they run like a software business, I guess. It's like doing the facilitating and all the software programs that need to be run for the trades to go through, and the brokers to talk to each other and stuff. So I think they run just about a monopoly. I don't think the NASDAQ and New York Stock Exchange have any interest in dealing with the mess that is the OTC. I think they're trying to, everything I've read from NASDAQ and New York Stock Exchange is like they're trying to be perceived as like this top level, we're for great businesses kind of thing. Like there's like an elitism kind of attitude towards New York Stock Exchange and NASDAQ. That's ingrained in them. OTC serves everyone else. And that's a really hard business to replicate. It would take it's nearly unreplicatable. I think I can't think of a way that anyone could come in and try to deal with this. It's an absolute nightmare problem that they've been able to solve. So, yeah, it's a beautiful business. It's lean. It's got a founder CEO who has a big stake in the business, who seems to be doing the right things from a historical point of view. And the only criticism I have is that they do pay out a pretty decent dividend, and the reason is because they make more money than they can spend, and that sounds like a nice thing, but
That's a problem.
it can be well, they give it out to stockholders and things like that, but what is their reinvestment engine besides just slowly increasing the prices over time and adding? But they've got like innovative ways by adding on little like extra sort of premium features and extra data sets and things like that they can sell off. And there's ways for them to make more money and that doesn't need money to make the money, if that makes sense. They don't need to reinvest to make the money, but at the same time, it's easier for me to understand a serial acquirer where it's like, oh, it's obvious what they should be doing with the money is going out and buying more amazing businesses. Whereas OTC doesn't really have that the string to their bow. They'll probably end up just keep on paying dividends. But if they can keep growing and keep the margins lean, margins amazing, and still be a monopoly, it's a really good business. But is it the best business I could invest in? I'm questioning that a little bit at the moment because of their reinvestment abilities.
Okay. Yeah, that's an interesting thing, because sometimes having too much cash can be a problem, and that's the case in this business, it seems. We've also mentioned dividends and how dividends may be a problem to your compounding. I would like to know if you think about reinvesting them in the same business, or you just add those dividends to your cash position and then you reinvest in something else, or you just say, okay, I will invest in what looks more attractive, not necessarily the business that gave me those earnings, let's say.
Yeah. So the only dividend that I get that gets automatically reinvested is a company called Teravest, just because it had the ability in Interactive Brokers to let that reinvest. So I just clicked that option because that's fine. The dividend's really small anyway, so whatever. That I'm okay with the dividends that come through. Not many of my investments have dividends. It's only OTC, Teravest, maybe one more. I'm trying to think off the top of my head. There's not many. Kelly Partners Group is the other. And the dividends that come in, which is small, it essentially just goes into my cash pile, and I will put that. It just goes into that next thing I want to invest in. Or I sometimes, if the cash is sort of building up, and which it doesn't build up very fast, I have to put more money into my account. But I normally I've been able to put some of that money back into companies I've already bought at better prices too. So,
okay.
The dividends just suck because I get taxed on the way before it comes to me, because it gets hit 30% withholding tax from the US and Australia. So I don't get the opportunity to claim that unless I'm making like, I think I worked out that once you go over about $7,000 or $8,000 US dollars equivalent in just dividends a year, then you can actually go through like a service to get a lot of that withholding tax back. But my dividends are just so small that I'm like, I don't.
Yeah,
I can't, it's
not worth it.
It's not worth my time. But it's annoying that I get hit 30%.
Yeah, and even if you reinvest them in the business as, let's say, simulating the reinvestment process in that given business, you get cut by 30% anyway.
Yeah, so the withholding tax gets you before I get the chance to reinvest. You know what I mean? Like, it would be better if they themselves bought back the shares or did something else with it than give it to me.
Exactly. And one question I would like to ask you is, are you a structure guy in terms of investment process, or you just go, improvise a bit? So could you guide us through how you, like, not step by step, but in order, because actually the order in which you do things matters, interestingly enough. Let's say an idea comes into your radar. What's the first steps that you do?
Okay, so I find an idea. The first thing I'm going to jump into is I'm actually going to do really rough mental valuation work in my head. So, and I'm going to look at the debt. They're the first things I'm going to go straight to. So I'm going to go to somewhere like Ticker Terminal, and I'm going to look at, these are the things actually now I think about it them in order. It actually goes revenue growth first for the last 10 years or 5 years or whatever. I'm just having a quick glance and go, is that moving up? I'm like, okay, sweet. Is that going up? Okay, I'll keep looking. Next thing I'm going to go straight to is the balance sheet and look at net debt to EBITDA and just see if that's like above 2. If that's above 2, I'm getting a little bit nervous, but I'm going to keep looking. The next thing I'm going to look at is a quick, really rough valuation of like enterprise value to EBIT, something like that, or enterprise value to cash flow, to free cash flow, something really rough like that, and just have a little look to see whether I'm like, is this thing at like 50 times EBIT and has always been 50 times EBIT? I'm like, this is going to be hard. This is going to be hard in my brain. Or is it like single digits? And if it's single digits, revenue seems to be growing. And then I'll go in straight to the website of the company, read like what they do. Like, okay, here's an example. I'll give you a real clear example. I found a company called Avtech, Avtech. It's a little tiny aviation software company out of Sweden. We've talked about Sweden a lot. It's just coincidence. Found this little tiny company. First thing I did was I did those things. Does it have revenue growth? Does it have crazy debt? Is it whatever? Is it relatively priced? Then I'm trying to figure out like what is their competitive advantage. So I'm just reading and trying to figure out, do I understand what they do? How impressive is what they do? So this aviation software is like for like live weather tracking inside of a cockpit of an aeroplane, for example. And they do a lot of, and that's like mission critical to an airplane. If like to make sure the weather is accurate and correct while flying an airplane, that seems important to get that right. So I would argue that, okay, that's a very important thing that they're doing. It's not some fashion thing. It's not in some sort of trend. It's not like cool. It's like, oh no, this is important for like lives, and like this is pretty critical. So that's a good first step. Second step is like, do they have like contracts, or like how good is that revenue quality? So then I have like this big like list of ideas in my head about like what I'm looking for in terms of like quality revenue. So like, do they have like long-term contracts? Who are their customers? Are they business to business? Are they business to government? Are they, is there services on top of like the installation of the software as well? I'm just trying to then figure out about then it's all quality stuff, but it's like, kind of logical, I would say. And I think the more you do this, you'd be getting to this point, I'm sure, where you can kind of there's a lot of like yeses in a row. You start to get more and more interested. You're like, oh yeah, that's kind of cool. Oh yeah, that's kind of cool. Oh yeah, it's cheap. Oh yeah, the revenue's growing. Oh yeah, the guy owns 70% of the stock, and he's, he pays himself $100,000 a year. Like, he pays himself nothing, but he owns all this stock. So this is his life's work. Like, they've got all these contracts. The backlog is huge. You're like, okay, this is getting interesting. I need to, and if they're sort of the steps that I'm taking to figure out like, how deep do I go here?
Yeah, That's interesting. And do you look at publicly available write-ups, let's say on Value Investors Club or anything like that?
I do if they exist. A lot of companies, obviously, it doesn't exist, which it actually can sometimes be a hindrance because you get a bit of a quite a optimistically skewed kind of hit from the person who's writing it, and it's nice to just get a bit more information, but I think you've got to take it with a pretty serious grain of salt. So, for example, I looked at a company a month or two ago, and I loved this idea. And I found that there was a write-up on Value Investors Club, and this guy had written up about this company. And I'm like, could have been a girl, guy, whatever, written up about this company. And I'm like, what they've written is like, okay, I knew all those things now from my research. But this guy seems really bullish on this business, like super, super optimistic. I wonder what he has done previously. So then I go like click on his name and go back through the previous write-ups he has done. And there's like 6 or 7 write-ups of different companies. All of the previous write-ups, those companies have like gone like down like crazy bad. Like they, from whenever he said like this is an amazing opportunity, they have just got killed from that point. So I'm like, all right, what are the chances that this investment is not like the others, that he is different to the one, or is it he's just like this crazy guy who's just, shooting from his hip and has like no idea what he's doing? So you've got to take it with a bit of a grain of salt. I think the problem is it's just not very subjective. It's very subjective, not can often be not very rational. It can be a bit over the top. So I'd be careful of write-ups, but I like them because you normally can uncover some information that I haven't found. So they're good and bad at the same time, if that makes sense.
Yeah, it makes sense. And you actually share a write-up once you've made a long investment, or a short, let's say, but usually it's a long investment. So you already have the biases. And you don't want to get the biases from other people because your own biases are enough. But I do like to read them because there's people. For example, I'm researching Evolution gaming. It's I'm sure you know it. But for the audience, it's basically a provider of online casino games. And there's a lot of write-ups, and some of the people that have done write-ups on the company, I actually know them, and they've done like 3,000 hours of research on that business. So imagine getting not 3,000 hours because you can't say everything in a single write-up, but it's a lot of time saved. So it's interesting, just get the facts, and maybe focusing on the facts, it's better than focusing on the opinion of the writer.
Totally agree. That's a great thought as well. You're exactly right. Even though I said that you be careful with the write-ups, you've got to read them because someone's done a lot of work into this, and you're going to find information that's like, you just leverage. Yeah, you're saving yourself like a huge amount of time. The question then is, you've got to make sure that what they're like, can you fact check that information as well? So you have to be a little bit careful. Like, even though they've done all this work, not everyone is going to like. People make mistakes when they write. I make mistakes quite often with things that I thought were one way but were actually another, and I got my facts even wrong. So. But yeah, a lot of the heavy lifting is done. So you got to leverage it. I totally agree. It's even like, I have a YouTube channel and I talk about investments on my YouTube channel and about companies. I hope people are fact checking me, and I hope people are just saying, "Oh, this is an interesting idea. This I can see." I try to point out like potential problems, or I try to be as balanced as I can be. But sometimes I'm obviously not. Sometimes I'm going to be biased and I can't even help it. So I hope people are fact checking me, and I think that's what we all have to do. So as long as you're fact checking as you go, it should be sweet.
Yeah. And would you say reading the write-ups first or the annual reports first? because the annual reports also have some bias because it's the management that it's like a marketing document at the end of the day. But what would you prioritize?
Good question. If I had to like track my, like, if I statistically looked at it, I think I would 60-70% of the time be reading a write-up first, to give myself the motivation to go and listen to an earnings call. But I knew, like Markel, for example, a few years ago when I invested in that company, I didn't read any write-ups before I invested, and I'd spent days just listening to earnings reports. Just because I found Tom Gaynor like this exceptional person, like as a human. So I just liked listening to him. So I just I was just going through YouTube video after YouTube video whenever he was speaking. And like, I felt like I knew him, and like, it was really, so it's not, I don't have a structure is the answer.
Okay.
Whatever I feel.
Yeah, but it's that's interesting. And one thing, now that you've touched in actually knowing the manager or the CEO, one thing it's very interesting is that people are kind of bad at lying or faking themselves. Very few people can do that. So once you've watched like thousands or hundreds of hours or whatever of content of people of
Maybe
the CEO
tens of
speaking,
hours.
yeah, tens of hours of someone speaking, you actually intuitively get a good idea of how that person operates and thinks. And obviously you have to take it with a grain of salt because there are very good marketers out there, and CEOs rise up to the top because they are they speak very well, they have an attractive way of thinking. But it's interesting also to research, like on YouTube, just interviews of the management, because at the end of the day, you get to know them a bit better than if you just,
You're right. And that's pretty epic that you feel like you can pick that up. I think I can pick that up as well, but it's taken a fair few reps to get to the point where I think I can intuitively get a good gut feel for the people who are running this thing. And if you feel like you can get that now, I went to a conference a year or two ago in Switzerland where a CEO was speaking there, and I'll say the company's name. I don't think it's a big deal. It was Treveling was the name of this company, right? It's like a pet insurance company. And the CEO was speaking, and lovely guy, like great. But it just didn't feel right. Like I can't actually put the words on it. I don't know how to explain it. It's just like it came across like you're not American, so I can say this. Kind of too American, like too like showmansy ship, like trying to. It just felt a little bit unnatural or something. Just something was up, and I was just like, I'm okay with this. I'm just going to take a hard pass, even though this business seems like it's very interesting and doing a lot of good things. I'm out. Like I don't have the right feel here, and that was just me. But I was sitting in an audience of 150 people, right? And for the next day, everyone was talking about how amazing that presentation was and how amazing this company was, and we're in love with this guy, right? And I kept thinking, something wrong with me? Like, am I like? What did I see when the people next to me saw obviously something different and felt a different way? I saw something different, and I guess that's just the way it is, and that's why we all have totally different portfolios from each other. That's why we all have different ideas of opinions about things, and we're all just going through it in our own way and through our own eyes, and trying to do it our best way with our own judgment. And again, you've got to be a little bit diversified, because some of these you're going to be wrong sometimes.
Yeah, actually, most of the times, maybe, who knows? There's an interesting study about Warren Buffett's track record, and just 5% of the decisions he made were actually the big winners. 95 were average or okay investments, let's say. So if Warren Buffett gets 5%, we shouldn't expect better than 2.5, maybe. So it's interesting. Yeah, now we've talked a lot about investing and even more technical details. Maybe some of the audience won't find this quite as useful, especially if you're in the beginning of your investment journey. But I think it's very important to talk about the specifics, because the general ideas are pretty available out there. So yeah, just to provide a different kind of content. But I would like to switch back to Andrew Brown and
Sure.
let's say more the life part of things.
Right.
So I got very intrigued once I heard that you traveled the world, first of all, and secondly you lived in Georgia, which I love because I'm a Napoli fan. It's a soccer team, a football team, and the best player is a Georgian, so I like it. And you also lived in Ukraine and Bali. So how does that happen?
Yeah. Okay. Cool. All right. I'll try not to bore everybody, but we'll see how we go here. Okay. So 10 or 12 years ago now, I'm Australian. If you haven't picked that up from my voice yet, I'm obviously from Australia originally. But I started an online business selling fitness equipment in America through Amazon FBA. I did that for. I started that in Australia anyway, and once I started that business, it kind of took off quite quickly. I wouldn't start that business today, by the way. Like that was just I was riding a wave of at the time. Yeah, it's too competitive now. It's not the business I would start now. But anyway, I had that was what I did, and it was going quite well to a point where my tax bill was going to get pretty big in Australia. So I'm like, okay, I don't have to be in Australia. I could be anywhere in the world here. Why don't I go shop around for a new country? So I started shopping essentially for a country. So going through every country on the list one by one, and got to Georgia and found that they had what they call territorial tax. Territorial tax means money earned inside of Georgia is taxed at their 20% rate, but money earned outside of Georgia, they don't care about. Territorial. So I was like, that's very interesting because I make my money like selling stuff online in America. If I was in Georgia and set myself up in Georgia, that would be outside of Georgia. Therefore, I don't pay any tax. That was the theory. So that got me to Georgia. And when I got to Georgia, Georgia is super cool. That is a cool little country in the world. And I fell in love with the mountains there, and I love snowboarding and skiing. So I ended up just spending like a lot of time up there, and really enjoyed that. Traveled the world as well, just because I could, and I could work online. The whole digital nomad thing, that's what I was doing. And like it sounds all glamorous and awesome, and it's great for a year or two, but you also miss some basic things. Like you miss building, like having a community of people around to like, I play a lot of sport. I play a lot of tennis, and I really just wanted to join a club and play some tennis and have some tennis friends and stuff like that. Now I'm super into like paddle tennis, and like that's awesome because there's like a community of paddle people. It's super fun, and I don't know. And so I started missing like a community, and then that led me to Ukraine just because I had some friends there randomly at the time. I had been to Russia before, so I picked up a little bit of the Russian language in my travels just for fun. I know that's a weird hobby to like learn the Russian language for a bit of fun, but I can speak a bit of Russian. And I went into Ukraine, and then the pandemic happened, and then I got stuck in like Ukraine. I sold my company now, so I was sort of just like come into some money that I was like, okay, I'm just going to invest this money for now, and figure out what I'm going to do next in my life as I take some time. Because although that I was traveling and it seemed glamorous, I was actually working pretty hard on making sure that business was functioning okay, like hiring employees and dealing with like I was working kind of hard. So I wanted to take a little break. That got me Ukraine. Loved Kiev, loved that city, loved the people there, made some super good friends there. And that was sort of my little community that I had started to develop. So I was there for about 2 years, right up until like the week before the war started. And then like the Australian embassy called me like on the Monday morning and said, hey, are you still in Ukraine? I said, yes. They said, look, can you please leave? And I went like, now? They said, yeah, you need to leave. Like, please leave today. I went, all right. So I packed up like a little bit of a bag and got on like one of the last flights out of Kiev, got into Paris. And then, 3 days later, the war starts. And like, I just left all my stuff in Kiev. It was still there now. Like I haven't gone back, obviously. So it's all still sitting there. And then like that was all last year. And last year I was just sort of like, I don't know what to do now. My friends had all had to scatter throughout the world. Based on like the relationships they were in with their girlfriends and stuff, and I was sort of realized I'm like, oh, I don't quite know what I'm going to do or where I'm going to go next. So I came to Bali just from some friends' recommendation, and then while I got here, hopefully this is a little bit interesting, but what I did was the first month or two that I was here, I really had no intention of starting a business, right? I had no intention of building something in Bali, doing anything in Bali except just chilling out, figuring out what I wanted to do. I met a guy who has this massive big complex here. It's like, I don't know, 400 or 500 hotel room kind of thing. It's like big swimming pools and cafes and stuff. It's this big complex. And he and I just started talking because he knew, like, once he met me, he realized that I'm from like the business world and I'd sold a company. I'd done reasonably well. So he was interested in like talking to somebody about business stuff. So we got talking and he started just complaining about all these problems. He's like, oh, I have this problem. This thing sucks. And this thing, I wish someone could fix this. And I said, okay, look, you've got a lot of problems. What is like the biggest problem that you wish you could pay money to solve like today? Like, what would it be? He's like, okay, I have to sell all these apartments and I have all these like super dirty windows and I just need someone to climb up and clean the windows because everyone's scared to climb up the ladder and clean the windows. I just need someone to clean the glass so I can sell these apartments. So I'm like, all right, let me see if I can go find some workers and figure out like how to help you do that. So I went and found some guys. They were looking for work. So I said, look, come with me. I think I can get you some work. Taught them how, like, didn't know the language at all. Had to like do Google Translate to speak with them. Watched about 3 hours of window cleaning on YouTube. Went and cleaned windows for 2 or 3 days with my Balinese workers just to learn myself like how to do this. And this business now that I started with these couple of guys, we now have like this contract at this massive big facility where we clean the windows, and we clean windows at other places now around like this area of Bali, and there's no competition. It's recurring revenues. It's kind of simple. It's quite a nice little business. So anyway, I have a window cleaning company now that actually produces reasonable cash flow, which is kind of funny. And that's why I'm in Bali.
That's a brilliant idea. I couldn't think about anything better actually, because you got basically your first client right in the start. He basically gave you the idea.
Yep.
And
he essentially told me, can you just do this? Like, can you please do this? I'm going to pay you money to solve this problem. All right, okay. I guess
that's great.
Yeah.
That's great. I would be happy to hear that you're the biggest window cleaning company in Bali.
Not yet, but it's actually interesting because I'm studying serial acquirers so much. There's actually a very interesting opportunity, I think, here. If I can develop some more cash flow and develop some better operations around this business, I might be able to acquire some of the other businesses around because they're doing a pretty poor job. But you kind of need like window cleaning operations in certain areas around Bali. Bali is actually a reasonably sized island where I am, it's too far away from other regions. So it would be nice to have like operations in each one of those regions. So I feel like there's a bit of a roll up opportunity for a handful of window cleaning businesses here in Bali, but I'll deal with that next year.
Yeah, maybe I will cut that part from the video so no one will steal that idea.
No, it's the first thing people would realize is that working with the Balinese is like crazy hard. It's like so much harder than anything else. I can tell this idea to everybody and no one's going to copy it because it's actually really hard work to deal with the people.
That's so interesting. I love this little, because people think that business has to be super fancy or whatever, but there are very good businesses in very simple and obvious niches, and they actually generate good margins and cash flows and stuff. So it's very inspiring. And you were saying, oh, I hope this isn't boring, but this is actually the most interesting part for me. And it's interesting how you manage that Russia thing, like the war thing, because I guess most people would get kind of, I don't know if, I'm sure you got a bit overwhelmed because it's super normal. But from that experience, what have you learned about managing like these adversities that you can't do anything about because it's not on your control? Like, do you have any tips for managing that side of things?
No, but if I think about this a little bit longer, what gave me some security was the fact that I did have assets that I had accumulated over the years, whether it's just even money in bank accounts, my trading portfolio, my investment portfolio in with Interactive Brokers. Then I have another brokerage account called Saxo Bank. I highly recommend having like multiple, even like brokerage accounts as well, because you never know what's going to happen with one of those brokerage platforms. You don't want to have all your eggs in one platform. I think I had thought about like existential risk from particular countries or businesses getting completely blown out of the water. So like I felt quite secure from a financial point of view, I think. And that really gave me the confidence that I've got this. Like I'm going to be fine. Yeah, something might go wrong. Like I've got an apartment in Georgia, for example, and maybe a war breaks out between Georgia and Russia because there's always tensions there. Maybe something happens there and I lose that apartment. That wouldn't be like a big problem in my life. Like, yeah, it sucks. And yeah, it's worth money, I know. But like, I'm not like counting on that as like 80% of my net wealth or anything like that. Like, I think the adversity, I don't want to sound like some super arrogant here, but I really don't think I've had to deal with a lot of adversity in my life. I know everyone has adversity, but maybe it's a comparison thing. Like I was able to leave Ukraine. I have Ukrainian friends in Ukraine who are like worried about getting conscripted into the army. They can't leave. Like their lives have really significantly like gone down. I feel like my adversity is I don't have a lot of adversity is what I'm trying to say. I think the little things that have come my way, I've been relatively prepared for by diversifying myself around the world and diversifying my assets. But yeah, so I guess that gave me the confidence to have everything under control. I felt I was under control.
Yeah, so we are back. We had some technical problems, but it's good to diversify your cameras too. Yeah, so it's interesting how you perceive things in the adversity spectrum, because another thing that it's very interesting is that entrepreneurs perceive risks in different ways than people that don't have a business, for example. Let's say Bill Gates didn't perceive Microsoft as a big risk because he had nothing to lose. I mean, he was young and he could afford making mistakes. And I think that kind of relates to your way of thinking, because someone from the outside might perceive, oh, this is a big adversity. And for you, I mean, I'm sure it was hard because you have all your friends in Ukraine and things like that. But yeah, actually, by talking with you, I see that it wasn't like you don't perceive it as a big adversity or something like that. So it's very interesting to see that. Now, moving on to the next question, I would like to ask you. I also know that you were a teacher before, so I would like to ask you how important is formal education to maybe business people, because we are talking business, talking investment. Maybe for an academic, formal education is very important, but who knows? What's your thought for business?
Good question. I haven't really thought this through. I would say that primary school all the way up till you're like 13, 14 is like absolutely critical. Like you've got to get, that stuff is really important. I think so, like for me personally, when I went like those last few years of high school, I worked actually really hard and studied stuff that was kind of stupid. Like, I remember doing like English studies where we were like talking about like deciphering poetry and the meanings of poetry. I don't know, stuff like that where you're like, is this, I'm not the type of person that's going to need this, but whatever. So I don't know. I think going too narrow is probably a problem. Is probably not a great way to go. So I wouldn't want to lock myself into a specific niche where I'm like, for a lawyer, for example, if I did like law studies at school and then I went to university to study being a lawyer and then came out and was a lawyer, like I'm not really a good critical thinker of any other industry. I haven't had any other experiences, just law. Like you're good at this thing. Like, I don't know. I think it's good as from a teaching perspective. Being a teacher, I try to teach with the kids like as much stuff about all the different fields as possible. And I think that was like we did have some structure where you had to like stick within like this is science, this is math, this is English, this is chemistry, this is geography, history. But I think it was cool to just go big and go broad and just go everywhere. Like there's no such thing as these kids that I was teaching were like 11 years old. And I remember for like days in a row, we would just sit down and talk about World War II. Even though they weren't supposed to learn about World War II yet, they just wanted to know about World War II. They wanted to know how this possibly could have happened in like with people killing each other like this. Like how did this go down? And I was lucky that I knew a lot about World War II. So we sat down and we talked about it. We figured it out and it turned into like psychology. And the kids, you could just tell the kids were just super engaged and they loved it. And it's like, that's education where it's like actually interesting stuff. So I don't remember what your question was, but most education is pretty stupid. The formal education is stupid. Education really just means like being educated in anything and everything. Like, I don't know why we have to get so like specific about what we do. I don't get that. Makes not much sense to me. I have a business degree actually and an education degree. The business degree was useless. Like even though I study businesses and I have businesses, it is completely useless. Like let's be honest. Like there's so much theory that made no sense. Anyway, it might have been good if I wanted to go work at McKinsey or some sort of like consulting business or something like that, maybe. But I wasn't going to go down that path. So like it was I don't know. It was stupid. What about you? What are you studying? Are you studying at the moment? Have you studied? What are you doing?
I'm in the last year of high school.
Yep.
So I'm studying science. So it's a science course. We do physics, we do maths, we do Portuguese, English. So those kind of things. And my take on it is that there are some very useful mental models in pretty much every single subject. And I don't know if this makes much sense, but for higher education, I won't pursue a business school or business degree. I will do engineering instead. Partly because I really like Charlie Munger, and he really inspired me into understanding the models of physics and probability and all these other fields that have nothing to do with investing, but are quite useful to investing actually. So yeah, that's what I want to do for higher education, and I really like school because you get to it's like a demo session of life. You can like experiment and not have too much to worry about, you know, and you actually learn a lot. So and get to know a lot of people. So I like it, but I would like to know what's your opinion on my interest for, let's say, engineering for higher education.
Oh, engineering is a good one. That's pretty good. That'll be practical and logical, and it won't pigeonhole you. It'll teach you to be a problem solver, and I think that's going to be the critical skill. It'll because it's got science elements to it. It'll make you understand the scientific method, and make sure you really get drilled into that, proving things with like factual information. Yeah, that's a pretty good direction to go, if as long as you're interested in it and as long as you find it like like stimulating. Yeah, that's pretty good. Yeah, that's actually that's better than a business degree, I think. I think I can even tell already, like, we've only been talking for like an hour or two, but I can tell you're going to struggle at business school because you're going to find it stupid. Like, you're really going to find it like you've learned more better information already in your brain, just from the questions you've asked and the fact that you've been studying Munger and Buffett and like these greats of investing, of the investing world. You're gonna struggle at business school because they teach you like stuff that's wrong essentially, and you're gonna hate it.
Yeah, I guess I got a bit scared of that from hearing Munger and Buffett talk about business schools, and also, yeah, from the experience of people I know, they don't get much practical knowledge in business school. So I guess it's the best choice, at least for me, because I really like to solve problems, like physics problems, because you can actually imagine them in your head and see them working in real life. So it's interesting. But I really love investing. So I think that's what I'm going to do for the future, not engineering, but I guess the knowledge from engineering is more practical. And also, it's a bit of modeling people I admire. For example, Jeff Bezos and many other great entrepreneurs have engineering degrees instead of business degrees. So that's also something. Yeah, but we've talked enough about me. We're here to talk about you. So
I found it interesting.
No. I guess this is a conversation. I actually like to think about this YouTube thing not as much as interviews, because they're more like chats and conversations. So it's a mutual exchange, not just from one side, I guess. So thank you for asking also.
No worries. You're like, holy shit, man! You're very impressive for your age, and yeah. Anyway, you know what you're doing. You don't need any advice. Just keep going. You're sweet.
No, I actually love to get. I don't know. Advice can be pretty tough sometimes because people give you advice based on their experience, and it's everyone. And I've made some pretty dumb mistakes just by following advice of smart people, and then I realized from experience that maybe it's a bit more situational and nuanced than just following rules. But yeah, but I like to learn from other people for sure. It's like the best thing you can do, and I truly enjoy it. So Thank you for being here again.
No worries.
Yeah, moving on to the next question.
Sure.
I would like to know, what is it that you try to avoid the most in life? So what are you running from, let's say?
Oh, wow. I definitely didn't prepare for this question. Let me think. I would say that I'm definitely pretty. I'm running away from like bad health. That's something that I actually do spend a lot of time thinking about. I feel like that's probably the thing that makes me most nervous is like, oh, if I really need to make sure I'm looking after my health as best I can. Because once you have health problems, like, and things, you really start to, like, I've had some health problems, and you just really start to figure out that that stuff's scary. Like going to hospitals when you're getting like checked up on, and I don't know, that stuff really plays like in your brain, and it can really give you like you can go through. It can play around with your optimistic outlook on the world as well. Like you can actually go down quite a depressive path if you think that your health is really related to that. If you're really having a bad time with your health, is something that can really play on your mental strength, and
Yeah.
it takes a lot of mental energy going through something of bad health. So what am I running from at the moment? I feel like I'm actually trying to run in the opposite direction of bad health. So if that answered the question at all, I don't think I care if I make bad mistakes in my investing. I think I've got enough skills in my brain to make the money back if something goes wrong. I don't want things to go wrong, and I'm trying to diversify and like think about all the scenarios. That's why I have multiple exchanges, multiple bank accounts, multiple things in multiple countries, multiple residencies. Like I've got like I feel like I've really spread out quite well, but um, if it all went to zero, I think in a weird way that'd be nearly fun, because you'd be like, all right, I've got to figure this out again, and kind of the challenge would be nearly put a smile on my face. So that's not scary. But the health stuff is pretty scary.
Yeah, that's a great answer, and I think that we fail to prioritize health enough because it's something that plays out over the long term. We can't see the immediate effects of, let's say, bad habits tomorrow or in a week. So it's a bit like investing. You have to think about your future. And I also love sports, so I can relate to that. And I think I don't know what I would do without sports and like physical activity. So it's also an interesting thing that we have in common. So yeah. And what are you running towards? Because you've mentioned what you're running from. So
Like everybody around this age, sort of in your 30s, you kind of question, what's my purpose? Like, what am I actually doing something that I'm really going to get the satisfaction on that I can do for the rest of my life? So I feel, and you're probably going to feel like this, that investing is something that we can do forever, which is awesome. We never have to retire from this. We never have to, like, my dad who works on the farm, he loves the farm. His identity is tied to the farm. He's a farmer. That's him. That's who he is. But he's getting older, and physically he's not going to be able to handle it in, say, 5 or 10 years time. So taking that away from him is going to, I worry it's going to crush him, because he's going to lose like the thing that he loves. And we're working on with him at the moment, trying to find other things that he actually really enjoys doing. So he's like, oh yeah, it's not so bad giving away the farm. It's not too bad. But I guess the idea in my head is like, investing is cool, but I don't need to spend all my time on it. Like it's nice to read and to think but I make a few investments, and like I don't. That's it. Like
Yeah.
I enjoy reading the annual reports and I keep up to date with what's going on, but that's not a full-time job. Like that's not keeping me occupied all the time. So between
Yeah.
that and like my window cleaning business here and playing some sport, am I fulfilled enough? And I think I could be more fulfilled. So I guess I'm working towards finding that next challenge in my life. Maybe is not the right word. It's more like the thing that like I can see myself doing for the rest of my life. Like you'd have to like it's really cool when you talk to people who are doing the thing that they're like, oh no, I don't care if I get paid or not for this thing. Like I'm in, this is my thing. Like I'm super into this. Investing does feel like that, but it's not enough. Like I
Yeah.
kind of I've got more to do, more to give. And I thought starting businesses and growing businesses was one of those things, but the more I have done that and am doing that, it actually kind of gets a bit lonely because it's just sort of me running these businesses and yeah, I hire employees and stuff like that, but it's still kind of just me like running these operations, and that's cool. And I've got some people to talk to, but it's not quite the same. I think it would be really cool to work, find something where working with a couple of people or a handful of people that are like super amazing and you're all sort of working towards one goal that you all sort of believe in together. I think that could be kind of cool, and that might be something that I figure out at some point, and I'd be okay. I'm not. It doesn't have to be my idea or my project. I think I could happily join somebody else's project because I want the sort of like the more the atmosphere and the team stuff, and like let's take this on and see if we can solve this problem or whatever it is. And I think I'd be more interested in that than the idea itself. So I'd be fine to do something where it's not even my idea, but yeah, I don't know. I'm only just playing with that idea very recently, like over the last few months, and um, I've realized that it's not. I always think all my life I was sort of like, I'm going to start the businesses. It's going to be my company. It's my plans. It's this. It's all like, all based around me. But as I've got to this point where I'm like, oh, that's kind of boring. Like you kind of get a bit lonely doing it on your own all the time. Um,
Yeah.
So my theory in my head at the moment might be to keep the cash flowing businesses that I have, like my window cleaning business, and I have another couple of little businesses, but they're small. And like keep the cash flow coming in, but use that just to fund my lifestyle while I go pursue something really fun. Um,
That's
and
great.
what that is, I don't know. I'll see where I go with that. I don't think the window cleaning business is that was more of like, it felt like I was helping this guy and it turned into a business rather than me actually wanting to do this business, but it's a good business. So I'm fine with it. And it's kind of cool, but it's also kind of, I don't know. It's the working in Bali thing is a bit lame. I don't know.
Yeah.
It's got its own problems.
I see. Yeah. So basically, my maths teacher told me this thing that really resonated to me, and she said that what drives our personal growth is that void that sometimes we feel when we are not really fulfilled with what we are doing. So obviously, it's not a pleasant feeling, but this on the long term, it's like a positive thing for us to try to figure out and be dissatisfied and want to and know that we can give more. So that's one thing. And the other one is that maybe this is just a crazy suggestion, but I know that Daniel Zhang actually used to work in maybe a consultancy firm before.
Yeah, he worked at McKinsey. Yep.
Exactly. Then joined Teqnion. So since you're so, let's say, eager to learn about the serial acquire model, maybe, I don't know, just shoot some cold messages to serial acquirers and see if they have anything for you. I don't know. Who knows?
It's very interesting you say that. I have had the same that idea. One of my serial acquirer businesses that I've invested in is called SDI Group in England, and they accumulate sort of scientific equipment manufacturing businesses in England. and in other countries as well. But I know that like the guy who's running it, Mike Creedon, I know that he is not sure on what the succession plan is for the business and what it looks like over the next sort of 10, 20 years. He's okay for the next sort of 5 or so. But then what? And I've always thought in the back of my head, because I've talked to him a few times and he's a great guy. I've always thought, look, I should probably hit him up and just say, hey, let me come like learn everything, just absolutely everything about this business. And I don't mean to like work towards taking this over one day or anything like that, but you're going to need to start thinking about what happens next after you. And I have had that idea in my head. Yeah.
Yeah,
So that was very
so
interesting. That's very interesting that you spotted that too, because I have been going down that path in my brain.
great. That's super interesting actually, and I've thought about it myself. So
Yeah,
uh,
this is what I think the serial acquirers need. So this is just between you and me and your audience, but that's fine. Between you and me, I think serial acquirers they need somebody. So at the moment, how they're sourcing opportunities like acquisition deals is they have to either cold call themselves, like they do the cold calling and try to develop that relationship themselves, or they go through business brokers, right? To like so some business is looking to sell their operation. The problem with going through business brokers is the business brokers all have the wrong incentives, right? Compared to the serial acquirer. They're all trying to make it happen as quickly as possible for the highest price possible, and they don't care about the quality of the business, right? That's what the business broker, they don't care. So the best way for a serial acquirer to make an acquisition is for them to find it themselves somehow. The problem is that's hard work. Like it really is. Like that takes. I listened to a guy who works for Harris. Harris is a subsidiary of Constellation Software,
yeah,
and he said that it takes, on average, 4 to 5 years for a potential acquisition to finally see what Harris, Topicus, Constellation Software are all about and submit to the deal. Essentially, that it takes them that many years to build up that sort of like trust, that relationship, that integrity, that when the business is going to be acquired, that they're actually not going to pull it apart and just flip it, because that's a part of, and so anyway, what I'm thinking is that a lot of serial acquirers, especially the good serial acquirers, I think that they would love to have somebody in an area of the world that they don't have someone or a team or whatever, essentially as a contractor, to build these relationships with potential business acquisitions for them and have like this pipeline of like hundreds, 200s, thousands of potential businesses where someone has gone and actually like said, hey, look, this is the Teqnion way, or this is the option. This is a really interesting option for you when the time comes, and get them before they go to the business broker, because that's how the serial acquirers source deals in the first place. Is they have to do this themselves. The problem is they're sitting in Stockholm, Sweden, or whatever country they're in, but like it's better to have someone on the ground in that country. So you're in Spain or Portugal?
Portugal.
You're in Portugal. So Portugal, great example. There are literally thousands and thousands of businesses in Portugal that would have never have heard of like the serial acquirer as a succession plan for their business. And there will be amazing
Sure.
businesses in Portugal that would be amazing acquisitions for some of these serial acquirers. They just will be, just from the sheer numbers. So, but the thing is, these serial acquirers don't speak Portuguese. They don't know how to build a relationship with Portuguese people. Like there is an opportunity, I think, for someone like you, someone like me, to go to a country and just go, I'm going to be the representative for this particular company, and I'm going to go around and build up this amazing pipeline of all these businesses and have really good relationships with them, and like just cold call at first, go and meet them, and just tell them that, hey, look, there is another opportunity for you to sell your business whenever that time comes, and develop that sort of like pipeline for these serial acquirers. I think there's a big opportunity because that's what they all want. They want deal flow. All the serial acquirers. They all need it, and it's hard to do. It's really hard. It takes a lot of long-term thinking and relationship building.
Yeah. I think that's $1 million idea, actually. It's very, very brilliant idea. I have a couple of questions. We have like 3 minutes to close this session.
Sorry, let's do it quickly.
Maybe we can do it a couple of months from now, a part 2 or something, if you're available.
Sure.
Very quick. I think if you get the incentives right, it might work out very, very well. And second, my question would be like, would you see it in a framework where you are the employee of that company or actually a service company? So you're a separate entity and you're selling a service to the serial acquirer.
I don't know. I don't know how the structure would work. I think you just do it based on what they want. So you talk to them and say, look, is it a pain in the ass for you to deal with like visas and like the regulations in that country, the tax system, I don't know. It probably is going to be a pain for them to hire you as an employee. So I would assume it would be easier to hire your business as a contract. Like just say, we contract out to this particular business and they do business development, like pipeline building for us kind of thing. And they're like a representative for us. And that would be the easiest thing for them based on like from an accounting point of view. I think it'd save a lot of the headache because they can just pay a bill and I would have to deal with like the tax in that country and the visas and all that stuff, which would make total sense.
Yeah, that's interesting. If you need a business partner in 5-10 years from now, when I'm actually able to work, just hit me up. So it was very, very wonderful conversation. It's a shame that we only have 1 minute left of recording, because I would like to speak more time with you. But thank you so much for coming up, and it was a very, very interesting conversation. Thank you.
I appreciate it. It was a lot of fun. Thanks, mate.